Hi everyone, it's Stu here again. Welcome to the proptrade.com. It's it's not middle of the week, it's Thursday, isn't it? Thursday, the 12th of June. So we're already coming to the end of the second week of June. We've had some movements this morning. We've had the main data this morning has been the surprise slip in UK GDP, quite a significant decline there for April, 0.3 of 1% from a growth in March of 0.2 of 1%. Obviously, the tariff issue with the US, not really a player in the United Kingdom. They've got that deal. There's only 10% of goods really traded with the US, and they're sort of in balance, US UK imports exports, which is why they Trump was so keen to do a deal with the UK. But that was, disappointing on the back of the big announcement yesterday of increased spending from the under pressure Rachel Reeves, the Chancellor in the UK. Industrial production also falling, manufacturing production also missing expectations. So that's weighed on sentiment in the UK this morning. Actually, the stock market has actually moved back up and sterling's come down a tad on that. Main news today, the big three candle or the three bear news is this the PPI data that's coming out in about 15 minutes time out of the United States. Remember yesterday we saw this weaker than expected inflation data. If I just go back to yesterday's CPI data coming in 2.4% on an annualized basis, and the monthly number much better than expected, weaker than expected, 0.1 of 1%. We saw an immediate sell of the dollar. Stocks rallied, but all of that has been sort of balanced, sort of shaken back out. On the back of the not really market moving news around China and the US deal. They've agreed the deal sort of weeks ago. They've cemented it yesterday. Trump's trying to obviously play it up, saying it's a done deal with China. Chips for, what do we call it? Rocks for chips. So the Chinese get US cut down IT, and the US get the key rare earths and magnets and other micro electronics, micro minerals that they so vitally need. So PPI, will it be as weak as the consumer price index yesterday? We'll see. I'll say it in about 10 minutes time. Remember, producer price index, that feeds into consumer price index. So and again, if we look at the Forex factory calendar here, you can see the core PPE here went negative last time, and it's under expectations again, a bit like the CPI has been. So the decline here, the weakening is continuing. So we'll big surprise last time. So see what happens at this time with the PPI data, the core number, and the headline. Which you've got the headline and monthly data as well, similar sort of decline here. So weakness in producer price index. And again, the administration have been saying, there isn't any inflation. We've been weak for a while, and it made big political gain out of that yesterday. Scott Bessent yesterday was being cross-examined by the Ways and Means Committee in the US yesterday. Again, stuck to his guns about it's not going to be inflationary, this big spending they're cutting, and the cuts to Medicaid, which the Democrats are up in arms about, is really lost in what they're saying is people that don't deserve it, illegals or people that shouldn't be getting it anyway. But anyway, see what that looks like. Obviously, it's Thursday, so we got the weekly claims as well. And again, remember last week we saw that spike, this 22-month high on claims last week at 240,000. And last time, remember, we were saying every time we got to this 240,000 level, it's come down the following week. Well, we didn't. We went up higher than expected last week before last at that 240. And for the first time in a long time, as a 22-month high, we went to 247,000. We're expected to hold at this 240,000 level. 242 is expected in 10 minutes time. So we'll see if the cracks are continuing to show in the US jobs market with the expected impact of the tariffs. But as I say, the data, the hard data, around the tariffs is still holding up. So you know, the administration there are banging that drum quite significantly. So if PPI comes in better than expected, weaker, and the claims comes in even around the 240,000 mark, that's still a positive. We come in back to this 220 level. It's showing the resilience of the US jobs market. If we get to, like, you know, 275, 280 or something on the unemployment claim, that might be a bit of a surprise. Well, it will be a significant surprise. Obviously, the previous high here from October 24 took us to the 260 level. So obviously the other issue, the issue about moving illegals or legal immigrants out of the US has been obviously the hit on the labor market. So see if that is tightening up continue, because they keep saying, you know, repatriation of good quality manufacturing jobs for US workers is their big mantra. But you know, we haven't yet seen anything around that. We're looking for that into the June data and into the second half of the year. So sorry, the July date, it's June date today, obviously, isn't it? So anyway, all of that to come in 7 minutes and 37 seconds, as we see here on Forex Right. So have a quick look at our charts. Let's just quickly go through the open positions that we did have. This one's now back in the money. It's been moving around. This is the FTSE. We're still long this position now. I'm looking for a new all-time high in the FTSE on that one. Yesterday, we went back to target. Sorry, I came back to target one, I should say. I missed closing this out at this 43,000 level. It obviously found key resistance there, and it turned down. We closed this out later yesterday into close around at the T1 level again. So we're out of that long completely on the Dow, the US 30. Some more pips back. I'll update the Discord group. Remember, I put these on most nights. I didn't actually put a trade up last night. I was out, and I didn't actually update things. So we'll update those later. So that's another winner on the Dow, and it's continued to decline into the 50 period moving average here on the 4 hours. So that might find some support actually here. That might be on an intraday basis, might be some buying opportunity there on the Dow, even though obviously the indicators are moving down. Maybe if that holds, we can see some support there as we go into the cash open in an hour or so. The other position we had was the Dow. What was the other one? It was another the Dow. The Nasdaq was already closed. But obviously it was the yen, wasn't it? The Nikkei. We'd moved our stop loss up yesterday. This time yesterday, remember, we'd moved it up. We were going to move up to entry, and I actually kept it just shy of entry at the stop loss. So that stop loss has been hit now. So that's completely closed. That's a little loser on the second half of that trade, but we had a nice big winner on the first half of that trade. It was just 366 points. We took half of that off, so 183 points on the Nikkei. Nicely, we got similar moves in the Dow, which is now closed completely. And the other open position we had, I'll just do this quickly before the data comes out, was the euro pound, sorry, which has rallied to our target, and then I closed. As I posted on Discord this morning, I'd taken this out at this target level, this 85.30 level. It's our next target. So we got to target one this morning from entry here. We pulled the stop loss up to entry, so we weren't going to lose on the second half of the trade, but I'd closed it out, and I'm interested in seeing this might be a short opportunity here for the euro pound, but it's been such a strong move here on the 4 hour candle. We're going to see how it plays out. So we're out of this completely. It's 85.30. We got out initially at 84.98, our first target, from an entry at 84.60, or just shy of 84.60, 84.59.5 we got in on this candle here. So that was a nice move, positive a full winner on the position. And I'm looking to potentially put a short position on there. If we go up to the daily time frame, you'll see my logic here. A bit of a swing area through where we are now, this 85.30, but or sort of where we are now, 85, where we are, 85.40 zone here. So, but we'll see if it pans out. Here, can you see this area here? That's what I'm looking to perhaps get short. But I'm going to see if this continues to run. And as you can see here, 86.70, the 2024 high in January, and declined all year. That's basically what it did. We got to this 86.70 for 2024, and it went euro pound went all the way down. We up to the weekly and see what I'm talking about there. There's that November, January 2024 high, and it just declined all year, all the way down here into 82.25, and now we've bounced really aggressively here into April. And again, it was an area that, again, big shorting area here on this higher time frame, and it, and then moved down 6-7 weeks consistently under 84, and now we've rallied really significantly this week. So let's see if that holds. But that's a hugely engulfing weekly candle, isn't it? Taking out the last 6, 7, 8 weeks of action. But say on the higher time frame, it's still a resistance there. You can see that a bit better there, can't you, on the daily time frame? So I'm looking to see where this finishes today. I'm not going to, the idea of keeping going is getting a bit too greedy, isn't it? But we've had a nice run. A nice winning trade on this daily time frame. So let's see if this short plays out later on tonight. So watch that tonight, potential short euro pound. Elsewhere, let's go through them in order. We still got 3 minutes. Bitcoin 107,000. We had a rally earlier yesterday, then we sold off and we're down again today. So we had a move up to 1010 yesterday. If we look at the let's take down the hourly time frame. So we had a move up yesterday into this 110 area, 123 triple high, triple top there on the hourly chart. Our spike was yesterday afternoon at 3 o'clock, and now we've declined ever since. So again, using this strategy there, you'd have been short there at 7 o'clock last night, and you've just trailed your stop loss down, and you're in the money nicely on that short from this consolidation triple top. At 110 short here at 7 o'clock last night in the close of this hourly candle, and down we've gone since then. Into this is a 4 hour, I think it's a daily trend line, that one on there, actually, that blue dotted line. So that may be coming to a floor. I'm not sure what that, well, it's from all the way these lows back here at the 76,000 earlier. So it's perhaps that's not as significant as it had been. Obviously, it also just happens to coincide with the 20-day moving average here at that 106 level as well. So some money getting taken off there if we get to that target area here. But the trend is still running. Stop loss sort of around about here now if you're running that down. So anyway, Bitcoin move up yesterday, sold off, and moved down all of today as well. Oil. 76, it continues. It rallied to 76 into the 78 yesterday, and again, it's turned around a bit like the crypto market, down a move up this morning, but then that's all been sold off. So we're under $76 again now, but we're still, if we look at the daily time frame, it's still bid and had a great day yesterday to the upside. So 76 is our new support area where we sit at the moment on the oil market. Gold, what are we doing? 3382. So it's had another up day. We were short this. We got stopped out yesterday. No, I didn't get stopped out. I closed it out for 116 point loss. I think, was it yesterday or the day before? I can't remember. But we were, it was up yesterday and we're up again today. So gold continuing to move up off its 50-hour support zone from earlier in the week. We were trying to be short. This didn't work out. That's all right. And up we go down. Our stop loss area was here, but we got out here, didn't we? 33.42. I remember that number now. 33.42. We got out, and we've rallied off from that area. So this is now along here yesterday and today. Gold 33.85. Next target area would be the big around 3,400 area. So 34,400 is the next upside target for gold today here on this daily time frame, but it may peter out here, but we're lifted certainly today. Majors, the dollar data's out. Sorry, let's just have a quick look at the data. Unemployment claims 248, so it's consistent with the higher expectations. So more, 6,000 worse than last week, than expectations, in line with last week. Last week hasn't been revised low, which is interesting. So definite cracks in the jobs market, but again, CPI coming in, PPI coming in weaker than expected, 0.1% for the core number from 0.3 was expected to rise up. It hasn't happened. Remember, we were negative last month on the front running of the tariff wall, so the rise hasn't been affected. They've obviously been able to pass their costs through or absorb them. So the headline is also 0.1%. Was expected to rise to 0.2% from a negative 0.5%. That hasn't happened. So again, in line with CPI yesterday, we got weaker PPI reading, and 10-year, which I'll come on to the yields in a moment. Yesterday's big auction, 4.3710, the current 10-year yield, and dollar will have should have moved lower on that. Here we got the Aussie moving up. Let's just go to the 5-minute charts for these dollar crosses on the PPI. So Aussie up all morning, and it's moving to 65.25. Dollar CAD 36.23, down, way under the 137 area. 136 yesterday, and this morning we've given way, and it's again looping low. So dollar under pressure again. Biggest move, as I keep saying, for 2025 is the Swissy back to .81, a big area, calling the Swiss franc down here. There's 81. If we just tick this up, that's the 5-minute chart. Just tick this up. A huge sell-off yesterday. Again, a nice old move yesterday afternoon from the CPI, and it's continued to weaken. Swissy in demand. Just keep trailing your stop loss down on this one. 81 is calling, no doubt. 143 for dollar yen through a support area. Target area from trade from beginning of the month, 143. It's 143.10, 143.35 at the moment, and then there's this next cluster down there at 142.65 here on the hourly chart for yen. But again, another one, just sit on it, trend it down. Dollar weaker against Swiss and yen in particular. Safe haven demand for those two currencies. And the Kiwi, even the Kiwis are well over 60 at 62 here. And you see again, it's been a strong day weak day for the dollar, strong day for the Kiwi. Here, the hourly chart, the inverse of what we just saw on the Swissy, getting bid to the upside here in this 5-minute time frame. Euro 116's been breached. 116's been breached. Hear it here first, my friends. 116 has been broken for the first time in a long time. We got to the higher time frames here for the euro. We got to the daily and zoom in for you. Let's tidy this up. It's a big old move. So 116, when we were last here, look to the left on the daily time frame. It's off the chart, isn't it? 2024, 116. When was euro last up here? We'll go to our weekly chart. And here we are. Look to the left, we get to the 116 all the way back here. This is 25th, the week of the 25th of October, 2021. So euro dollar at a 4-year high. October 2021, euro was last up here at 116. 116 being breached. We haven't hung around at all at 115. I was expecting it to. 114 was a much bigger resistance. You can see that on the weekly chart. Huge up candle, retrace for 5 weeks, but then we followed through. Euro, sell the dollar is what's going on here, as well as buying the euro. So headline PPI 2.6% year on year, in line with expectations, but those monthly numbers were stronger than expected. 4.35.33 the 10-year yield. Currently it's down a tad, but remember we were what were we? We were 4.49.60 ahead of the 10-year auction yesterday, and ahead of CPI yesterday as well. So big move down in the yield curve as well. So euro 116.20, a 4-year high, and the bid remains very much intact here on this daily time frame. Our supporting 20-day moving average is now approaching that key 114 support area, and we are a whole 121.20 pips above that. So it's a weak dollar. Sterling, likewise, cable has breached 136 again. It was a target area earlier in the week, or last week we got to, and here we are through it now on the back of that PPI data. So summary of the last two key bits of data for the US three bits of data really for the US was that claims back to a 22-month highs we saw at 248,000. That's last week's, isn't it? This 22-month high. We got euro at a 4-year high. Sterling similarly moving to the upside again. We do the same with sterling as we did with the euro. There's the weekly chart, and we look to 136. Look to the left. It takes us all the way back to here where we flirted with it January 2022. So not quite as high as the euro, not as doing as well as the euro, but certainly you can see it was a big resistance area here. You can see that. Hope you can. Or last time. So is this a step too far? Everybody thought that at 135. It hasn't happened. We've burst through. 135 is more significant, but we've burst through it, and we're 100 pips higher at 136 at the moment. And yeah, dollar's been sold 136.08 for the pound. Gold will have followed through, I would guess, and Bitcoin might have benefited as well. So look, gold 3384 hasn't actually moved much since we since the data first came out, has it? But anyway, first target now on a short-term basis will be 3388 would be my target to the upside from earlier on here in the 5-minute chart, and obviously then 3,400 later. But so stocks have slipped a tad. Yeah, we're still down. The Nasdaq's down 0.3 of 1%. The S&P's down 0.35 of 1%. If we look at our derivatives markets, how that's actioned in the last 5 minutes is given back. It's got back. It's gobbled up some of the losses it's had earlier on in the day. So as we saw yesterday, we got a weaker dollar, stronger stock markets in this immediate aftermath of the data into a key resistance area. It was our target area, wasn't it? At 21,800 for the Nasdaq 100. S&P 500 back over 6,000. We were under 6,000 this morning. Yeah, most of the morning we've been under 6,000. We're back over 6,000, 6,003 for the S&P 500. Has that lifted the FTSE as well? Yeah, there we go. We're up a bit on the with the FTSE as well in the money on there, 88, 85. I can't remember where we got. Oh, it was at 900, wasn't it? Our target up here, 8,900. Yeah, but so FTSE is now back in the money, having been out of the money a bit this morning. So we go. The yen should have come back as well. Yeah, but we're out with that one completely now. The DAX for good measure was where we got the stock markets on. Similar patterns to the others. Short here for most of this week, 9th of June. Yeah, so short all week basically here on the hourly chart. The 50-hour providing resistance. Looks like we're going up, didn't happen. Looks like we're going up, didn't happen. We continue to decline. So the DAX being short all week. Went long, didn't we? Yeah, we got out with that target, I think, didn't we? Last time we traded the DAX. So there we go. Leave you with actually, let me leave you with the euro as it's at a major 4-year level. Let's just make the chart bigger, and then we can get rid of that. We got the weekly. You can see it in a bit more detail. I'll leave you with the weekly chart for the euro. Here we are, 116.27. We look all the way over here to the left, and here we are, October 2021. We were at 116 for 3 or 4 weeks as we were moving all the way down to under parity. This is September 2022 when we went under parity. There's is that parity there? 1? No, it's 101 there. But you know, that was a key a sort of support area at 1 as we were coming down 116. But here we are. We've rallied really again. There, look at that rally. The strong big candles to the upside for the dollar for the euro dollar this year. All starting with that announcement, the big fiscal spending on defence by the Germans. So big rally for euro, weaker dollar. Trump, no doubt, later on today will be screaming, if he hasn't already, screaming about selling the or cutting interest rates in the United States. So euro dollar index, Bloomberg just flashing here, their dollar spot index, the Bloomberg dollar spot index falls to its lowest since April 2022. We can see here euro dollar, which takes up a big chunk of that, those dollar indexes, at a high not seen since October 2021. So that's a big news of the day. It's a weak dollar. That will help the stock markets, as it did yesterday, but then we came back with the stock markets on that PPI data. So we've had weak CPI yesterday, we've had weak PPI today, we've had weekly claims at a 22-month high as well. We've got the dollar at these new lows, 3-year low against sterling and 4-year low against the euro. Trends can continue, my friends. Don't fight it. Stay on the right side, and there's many pips to be made. Just get out, when your stop loss is hit, and just move on to the next trade. So if there's no questions, I'll wrap this up. We'll go and get some lunch. I'm late for lunch today. It's 1:45. I haven't had any lunch. Let me see if there's any questions. There's no questions here today. I hope you're all well. Let me leave you with that euro chart there. 2116 has been breached for the first time. I'll say this again, since October 2021. All the best, my friends. Take care. See you all again tomorrow. See what that sentiment data looks like out of the University of Michigan tomorrow. I'll be with a colleague tomorrow. So I'm looking forward to that. Not done a joint webinar with Aurora for a long time, but really looking forward to that. So see you all tomorrow for a wrap up of the week. And what a week it's been. I hope the pips are on your side. Take care, everyone. See you soon. Be good. Bye-bye.